So the Bank of Canada held its key interest rate at 5%. We're going to talk about what effect that's going to have on the Vancouver real estate market. We're also going to look at the Vancouver real estate stats for August. And then we're going to talk about a potential opportunity that I see in this market, whether you're a buyer or seller or both. Real quick before we get started, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content, but I also make content designed to help you make your move in and around Vancouver. So if that sounds interesting to you, that's something you're curious about how that may look for you, if you want to book me for a free call, you can do so in the Calendly link below, and subscribe to this channel so you don't miss a future video. All right, so the Bank of Canada, they held the key interest rate at 5% last week. I'd like to say that this was a big shocker to the markets, but this is what was widely expected. In fact, in last week's video, I said for the most part, economists were expecting that the bank was going to hold the rate. And I think on the day that I created that video, or perhaps the day after, Canada's GDP numbers came out. And this was really the clincher as to why the Bank of Canada was forced to hold the rate. The GDP numbers, that's basically a measure of Canada's economy growth or decline. And economists across the country were all expecting growth in Q2 of this year versus last year. And in fact, the Bank of Canada themselves were expecting 1.5% of growth in our GDP year over year. Those numbers came in and the economy actually declined. We were down 0.2%. To simplify that, essentially, it's a sign that the rate hikes, the 10 plus rate hikes over the last year and a half or so have been working and are working its way through the economy. It is affecting spending. So it is working in a sense. When that data came out, I think the Bank of Canada was pretty much forced to hold the rate where it was. Prior to that, they had seen inflationary data kind of tick upwards, and they did also say in this report that they do expect it to continue to tick upwards, mainly because of what we call base year effect, which I explained in a prior video. But so they're expecting inflation to kind of continue to tick upwards before it comes down. But when this GDP number came out, they were forced to hold. Interestingly enough, Premier David Eby and Doug Ford in Ontario, a few days before the rate decision, they came out with a public plea to the Bank of Canada, essentially saying, look, Canadians are feeling the pain of these interest rates, and that's reflected in the mortgage rates and housing costs. It affects rental rates. And so they came out with this public plea to say, look, please don't raise interest rates any further. It's already painful enough. Some are saying that that's a bit strategic and a bit tactical in the sense that once the GDP data came out, it was pretty evident and clear, almost a sure bet that the Bank of Canada was not going to raise rates, at least this time around. So it was maybe an opportunity for both provincial leaders to basically, look good in the eyes of the Canadians by, standing up for them in a situation where it was likely the Bank of Canada was going to hold rates regardless. At least for us in BC, I think it's good that the Premier stood up, said something about it, because ultimately, and he said this in his message as well, this is hurting the construction of rental housing, which is, probably our biggest pressing housing need in this country. So bank holds the rates. Do I expect a major flurry of activity? I do expect more activity in the real estate market than we had in August for sure. September tends to be a busier month, but are we going to see the masses flocking back into the real estate market? There's not enough inventory for all of them anyways, but I don't see this massive influx. I do see an uptick upcoming. All right, so let's look at some of the stats of August from a Metro Vancouver and a Fraser Valley perspective. I won't bore you with this stuff. We're going to keep it pretty quick here. But on the Metro Vancouver side, you pretty much saw a leveling off of prices. Detached home pricing actually ticked upwards just a bit month over month, but I would suggest now that we are pretty much in that plateau of pricing. On the Fraser Valley side, pretty interestingly enough, condos, townhomes ticked up a little bit in pricing, whereas detached flattened, leveled out. So similar things happening in both markets, except what we're seeing on the Fraser Valley side is a little bit more in the way of inventory. Metro Vancouver inventory is still pretty tight. If we look at, a 10-year average on the Metro Vancouver side, sales were down 13%, but total inventory also down 13%. I think the number was 13.8, something along those lines, but they mirror each other. So the 10-year average of sales quantity down, Total inventory down by almost the same amount. Now, year over year growth, and I've mentioned this in a previous video, we should expect to see a great headline item saying year over year sales are up. Metro Vancouver side, they are up 20%. But last year is essentially summer is when sales started to tank and fall off of a cliff. So yes, it sounds good on paper, sales are up, but we really want to look at that 10-year average. Now, one of the metrics that we look at quite heavily in our business is what we call sales to active ratio. And this tells us how many homes are actually selling based on how many homes are actually available. And this is where things get interesting, because on the Metro Vancouver side, you have condos and townhomes that are still piping hot sellers markets. They're in the 30% plus sales to active ratio. Anything above 20% is a seller's market. But then you have detached homes which have dropped down into what we call a balanced market, sales to active ratio of 14%, and getting quite close to a buyer's market. Now, I can't give you any blanket statements, and nobody can give you a blanket statement saying the market's a buyer's market, it's a seller's market, whatever it might be. You have to kind of look at it from a micro level and from a neighborhood perspective. I subscribe to what I call advanced stats. So once a month, I'll get sent documents for every single neighborhood in the Lower Mainland, Fraser Valley. I'll know exactly how many homes were listed in every price band, how many were sold, broken down right into the neighborhoods, and I can dive deep, and this helps me out when I'm pricing properties for my clients to list, also when we're purchasing properties. So some of the unique things is in Surrey, detached homes have actually now entered into a buyer's market from a balanced market. But if you look at North Vancouver, for instance, detached still a strong seller's market. So don't listen to any blanket statements out there that detached homes are all in a balanced market or a seller's market, whatever it might be. You really have to drill it down into neighborhood. If you want the stats for your neighborhood, you can send me a text or comment below. I can get them sent out to you. But they help me out a lot in my business, and they allow me to kind of drill deeper. But rolling back to the stats here, what I kind of see moving forward is sort of this plateauing of prices now. The Bank of Canada holding the rate, that doesn't mean that their next move is a cut. In fact, they may choose to hold again in October. I think it's October 26th. They may choose to hold again. They may choose to increase the rate. As always, like I've mentioned on this channel, we're going to be looking at jobs report. We're going to be looking at inflation data to kind of see which direction they may go in that regard. So I mentioned off the top that I wanted to talk about a specific type of an opportunity that I'm seeing present itself in this market. And for me, the opportunity is out there for the upsizer. Now, in my personal business, a good chunk of the clients I work with are upsizers. They own condos right now and they want to move themselves in, usually to detached homes, but sometimes they end up in townhomes. But they want to basically upsize. And the biggest stressor that I get hearing from clients in that process, let's take the money side, the approval side out of it for a second, and I will circle back to it. But the biggest stressor is always the logistics. It's how am I going to time this? How am I going to sell my condo and find another place and make sure I'm not out of a home? How am I going to have the dates line up so I don't have to find temporary accommodation for a few weeks? It's always the logistics that are the biggest stressor, I would say, on the client. Now, the reason I think that we're presented with an opportunity here for the upsizer is, talking about those sales to active ratio numbers, right? Condos, townhomes, quite high, still a seller's market. Detached homes now, balanced market for most areas, and some areas are teetering on buyer's market now. So the benefit in this type of a market is if you're selling a condo or a townhome, you're going to get a great price for it. There's a lot of active buyers for that product. But when you're purchasing the detached home, when you're moving yourself upwards, you finally have some negotiation power around dates and around things that help the seller as well. For example, a subject to sale. So for example, if you want to buy a detached home and the market is in a frenzy, it's a hot market, you have to write the cleanest offer on that detached home. Even if you have a home right now you need to sell, you pretty much have to write an extremely clean, limited subject offer on that detached home to be able to get it. But in a market where we're in today, where detached is kind of slowing down, condos and townhomes have yet to follow that trend. you can actually write offers again on these detached homes, many of them, with a subject to sale, saying that, I will buy your home, but provided I can sell my home. And then again, on the purchase of that property now, on that offer, you can be, you have more strength to negotiate in terms of dates. We can even put clauses in there that allow flexibility to adjust the dates a little bit here and there. If you do receive an offer on your condo or townhome and the dates don't align with the offer you have accepted on the detached, we've already negotiated that you can adjust the dates a little bit on that purchase. So in this type of a market where the condos and townhomes are pretty hot still, detached is slowing down, that negotiating power comes back to you, and we can logistically make that process a much easier one. Now, I mentioned I was going to circle back to the cost because with every decision you make, there's always pros and cons. And the con of upsizing right now is if you have an extremely low rate, let's call it a pandemic mortgage rate, for instance, 1.5%, 1.7%, whatever it might be, you're looking at obviously a much higher rate getting into the next property. Now, oftentimes you can get a blended rate. If you're moving and you're staying with the same lender, you get a blended rate between today's rate and what you have, but ultimately that rate is going to go up. So your cost is going to go up in terms of what you're paying towards interest. Now, what a lot of people don't realize and don't quite factor in is when you purchase a detached home, if you are looking for something that has, for example, a rental suite, oftentimes the numbers work out better on that detached home, factoring in the rental income you get. When you compare it, for instance, to a townhome that may have a higher strata fee, you'd be surprised that the numbers and the affordability, at least from a cash flow perspective, sometimes looks better and very often looks better on that detached home. And the other thing to keep in mind is that rates, as we know, do not last forever. Whether they're low, whether they're high, they don't last forever. They're not something you hold for your entire amortization, your 25 or your 30-year amortization. They get renegotiated at renewal time. So again, I say this as an opportunity as someone who has worked with several clients in a hot market trying to do the upsize when the market is in a frenzy, and it's an extremely difficult task to get done. And in many cases, the sellers sell their property, they're having to rent for a period of time because the prices of the detached homes are running away from them and they can't find the right property. They end up in an area they don't want to be, etc., etc., etc. So where I see the opportunity again is for that upsizer, being able to take the logistical headache out of it, making it a little bit easier. Is it a little bit more expensive to do right now than in a hot market? It is, but it's also hard to say because we know here in Vancouver what happens is when rates come down, prices start to go up. And it's only a matter of time before that happens again. I'm not suggesting that this is going to happen this year or it's going to happen next year. Could we see rate cuts next year? Absolutely. Again, the Bank of Canada, they expected growth in the economy 1.5%. We were down 0.2%. That's a pretty big miss, and it's going to be very interesting to see where Q3 data comes in as well. So upsizers, I think this is an opportunity for you to maybe investigate, talk to a mortgage broker, see whether it makes sense for your financial situation, because again, you're going to be able to do it in a much easier way in a market like we have today than when the market heats up again. So there you have it, guys. I hope you enjoyed this week's video. If you did, hit the like button, because what that does is it takes the video and it sends it out to more people so they can learn from it as well. And if you enjoyed this weekly real estate content, subscribe to this channel so you don't miss next week's video. And finally, once again, if you're in the Vancouver area or the Fraser Valley and you want my help with your real estate situation, you can book me in the Calendly link below, or you can just send me a text, give me a call, shoot me an email, whatever works for you. I would love to chat with you one-on-one. But outside of that, thank you so much for watching again this week, and I look forward to seeing you in next week's video.